lot of the people building this system are people that are debt barons, essentially. I mean, BlackRock in particular had a really big role to play in the whole COVID monetary situation. At the same 2019 Jackson Hole meeting where Mark Carney talked about, the new financial system to come, is when BlackRock presented their going direct paper, which was the policy that was followed essentially and exactly when COVID hit, just a few months later. And BlackRock utilizes debt to, increase its profitability and power and ownership of things around the world. And honestly, since debt's been such a big part of the control system for a long time, it's, the people that can control the most debt on Wall Street and stuff tend to be the most powerful and the most successful, right?
BlackRock, the world's largest asset manager, has faced criticism from various quarters for its environmental, social, and governance policies, particularly concerning its investments in fossil fuels and its governance structure. Despite advocating for sustainability and pushing for ESG investing, BlackRock has been accused of greenwashing by activists who argue that the firm's actions do not match its public statements on sustainability. For instance, Bluebell Capital Partners, a small investor in BlackRock, expressed concerns over the gap between the talk and the walk on ESG investing, accusing the firm of not living up to its ESG commitments. In an informative discussion between Whitney Webb and Mark Goodwin, Whitney shares her analysis regarding the scheming plans of entities like BlackRock, which she claims seek to unlock and take control of as many natural assets as possible. According to her, by making these resources part of the financial market, firms like BlackRock could increase their power, making almost every natural thing available for trade. We will now bring you clips from the discussion, as Whitney Webb reveals the dark truths behind the global elites with Mark Goodwin. While watching, please take a moment to give us a like, subscribe to the channel, and turn on post notifications for more similar videos. Thanks, and enjoy.
It seems like in Larry Fink's case in particular, there's a goal, a big ambition there to develop new asset classes that can be used to basically fuel their existing business model and perpetuate it for millennia forward. So one of these that I've been writing about for a few years is the whole idea of natural assets, what they call nature's economy. And one of the groups that has been sort of propelling this forward, at least one of the earlier groups, the Intrinsic Exchange Group, which is a product of the Rockefeller Foundation and the multilateral development banking system, has a graphic on their website called The Opportunity, and they show there the existing amount of assets in the world economy, and then show what it, if we unlock natural assets, how nature's economy, it's like 6 times the amount of existing assets in the economy today. And so as an asset manager, BlackRock being able to unlock and take control of as many natural assets as possible that aren't currently part of the financial system is obviously a way for them to perpetuate what they do and deepen and expand their control over not just people in the existing financial system, but really over the natural world as well, and essentially turn everything alive into a tradable Wall Street financial product. And the goal, as Fink has stated, is to have all of this on a universal ledger, on blockchain presumably, and have it be trackable and surveillable, which is interesting if you look at it through the context of risk management, which is something that Larry Fink is very open as having been one of the guiding lights of his whole career. And so by having it all surveillable and automated in a sense, he's able to have his risk management AI thing, Aladdin, sort of exercise control over it in unprecedented ways, I think, for their benefit. And then, of course, a lot of what's happening now as we're moving into this new financial governance system is the push to change all of the infrastructure towards this, quote unquote green model, I guess, or decarbonization, right? Which is, of course, interface with the global carbon market, but not necessarily so, like it doesn't have to be. But the push is obviously to create a bunch of new infrastructure all over the world, and BlackRock is positioning themselves to be one of the key players in that space. They acquired, I think they're called GIP, one of the biggest infrastructure, developers in the world. And I think one of their top guys at Davos just a few months ago was talking about how they're betting really big on infrastructure going forward, and it's going to be one of the biggest investment opportunities of the next several decades, actually. So I think they're quite ambitious, and if people aren't aware of this, I'm sure they'll get away with it, but we'll see. Well, they want to build the infrastructure both for the carbon markets and for the decarbonized world. They're using retirement assets of Americans, pension funds, and all of that to finance the constructing of what is essentially our debt-based panopticon.
A recent initiative led by the New York Stock Exchange, in collaboration with the Intrinsic Exchange Group, a partnership that includes major investors like the Rockefeller Foundation, has introduced the concept of natural asset companies. These entities are designed to manage and monetize the ecosystem services produced by natural assets, such as carbon sequestration and the provision of clean water. While this innovative approach promises a new way to invest in and preserve our planet's vital resources, many critics argue that it marks a dangerous step towards the commodification of the natural world. Meanwhile, blockchain is being tested for enhancing transparency, efficiency, and trust in global carbon markets, potentially making them accessible to more people and driving climate-friendly investments, as noted by the World Economic Forum and CoinDesk. While this seems promising, there is worry about greenwashing and the chance that it might not fundamentally improve market sustainability or fairness. The influence of major financial entities could lead to dominance and a flood of low-quality carbon credits, challenging effective climate change action. Let us now go back to the discussion, as Whitney Webb discusses more regarding this.
In the case of global carbon markets or the infrastructure for it, you have a company like Flow Carbon that's like tokenizing the assets, and they're tokenizing carbon credits that are produced by another high-integrity carbon credit standardization company. One of these, there's a couple different names for them. I think there's like 5 prominent ones, and then those are the ones, between the two of them, that's how they claim to verify all these reserves to avoid some of the scandals of carbon markets when they attempted to launch them in the past, of double counting, or the offsets weren't really real, or they were giving carbon credits for forests that they said were being saved from logging, but they were never in danger to begin with. And some of these controversies they're trying to get around with, claiming that, not unlike Fink does, the idea that like having it on blockchain magically is going to eliminate corruption.
Right, eliminates corruption.
Which is funny, because I think the way that they're able to perpetuate their corruption that they've been able to get away with in these ostensibly highly regulated markets we already have, I think the way they're going to do it in this model is through these trusted third parties. Just the trust us guys, they'll be able to manage our stuff, the surf stuff, and not let us get away with anything probably, but the big guys at the top, I'm sure, will be able to manipulate those trusted third parties. And in a lot of the cases, of like Oracle, companies that act as those oracles, like a Chainlink, I guess, you have prominent major big tech oligarchs like Eric Schmidt being intimately involved with their rise. And will they be beholden to those oligarchs at some point if they're like, we need you to do this and that? Right. I don't know. I mean, it's definitely happened in the past, so why wouldn't it happen in the new era? I mean, would blockchain prevent that? I mean, not necessarily. Well, I think it's likely, too, that either the national governments or the UN or somebody like that is going to choose who the trusted third parties are. They're going to be the kingmakers of who gets to serve in that role. And so they're able to choose the ones that are most compliant to their needs, or the ones that they created in the first place to serve the specific purpose and things of that nature. But to think that the fact that a lot of these corrupt entities that we know are corrupt or have engaged in corruption, BlackRock, JP Morgan, et cetera, are some of the key architects of the system, to think that they would all of a sudden not engage in that activity when they're the ones building this system. It's not like they're going to build a new system that ties their hands back, They're going to be able to engage in business as usual. And I think part of the goal of the whole global carbon market thing for them is that it allows them to unlock so many new assets and so much more collateral and so much other stuff to create new debt out of, and to just sort of expand the existing models they use to just unprecedented levels. and sort of perpetuate this into infinity. I don't know. I mean, it's just really crazy to think about, but I think honestly, the reason they haven't abandoned the global carbon market is because they need that new asset class that's so enormous. Because one of the things too about the natural asset thing, at least as far as the natural asset corporation model is concerned, is that you literally just go into a forest or you go to a river or lake and you identify the natural asset, and then at no cost to you, just after identifying it, you issue shares in the natural asset, a lake, a forest, whatever, and then you sell those shares to sovereign wealth funds, asset managers, whatever, and then you have an IPO and generate all this money. I mean, it's literally just pointing out something outside and being like, this is mine, I'm going to fractionalize it and sell it to people, and you're producing money in like, out of thin air, right, essentially. Yeah. And you're able to do that. I mean, the natural world is vast and huge, and they're doing this, they're financializing it all, as framing it as the only way to save the planet. Right. But really, it's the only way for them to save their insane debt racket.
In other news, seasoned cryptocurrency analyst Willy Woo suggests that BlackRock, overseeing an immense $9.5 trillion, may shift a significant portion of these funds into digital currencies, especially Bitcoin. This shift is influenced by the increasing trust in cryptocurrencies among younger generations. Recently, BlackRock's CEO, Larry Fink, has acknowledged the importance of attracting these younger investors, who are growing disillusioned with traditional financial systems, especially regarding retirement savings. Adding weight to Woo's forecasts, Bloomberg notes that Fink's rising interest in Bitcoin stems from its popularity among digitally native demographics. This strategic move could benefit BlackRock, as engaging these young investors may establish enduring relationships as they explore a wider range of financial services in the future. This trend is further supported by recent data showing a notable surge in investments in spot Bitcoin ETFs. On March 26th, there was a record daily net inflow of $418 million. The highest since March 13th. This surge occurred despite ongoing market volatility, which saw significant sell-offs in some sectors and modest inflows into Bitcoin ETFs. Woo also points out a rebound in Bitcoin ETF flows after a period of selling off, indicating renewed interest from both institutional and retail investors, particularly those preferring self-custody during market downturns. As traditional financial institutions increasingly express interest in the cryptocurrency market, the gradual adoption of digital assets by major players like BlackRock is expected to strengthen Bitcoin's position in the financial sector even further. Given the recent surge in investments in spot Bitcoin ETFs, do you believe Bitcoin's role in global finance will continue to strengthen? How might the growing interest from both institutional and retail investors shape the future of digital assets and traditional finance? Do you think BlackRock's environmental, social, and governance policies align with its public statements on sustainability? Or is there a gap between the talk and the walk, as suggested by critics like Bluebell Capital Partners? Feel free to drop your thoughts and analyses in the comments below. If you found today's video enlightening and want to stay ahead with more insights and updates on crypto and global finance, make sure to hit the like button, subscribe to our channel, and turn on post notifications. Your support is crucial for us to continue providing in-depth content and discussions. Stay tuned for our next episode, where we'll uncover more about the fascinating developments in the cryptocurrency space. Until then, keep questioning, keep exploring, and most importantly, keep investing wisely. Thank you for watching, and we'll see you in the next video.